So talk a little bit about the funding of a short-term rental, some of the ways people can get in. And then I think it's an interesting topic because I don't think people understand that lenders are almost like stores. Like one might sell batteries, one might sell milk. They are not all the same. And I know you have some unique programs and things you can offer people. So I'd love to hear all the ins and outs of that.
We started the mortgage shop and have brought a lot of the most commonly used products for short-term rental investing under one roof. The new thing with short-term rentals is DSCR loans. So DSCR stands for debt service coverage ratio. It works kind of like a commercial loan. So it does not go off of your own personal debt to income like a conventional loan. And let me just preface this with, there is no interest rate that is ever going to be as low as a conventional loan. So people are like, oh, well, that sounds great, but the interest rate's high. Well, yeah, because the interest rate is high because they're basically giving you a loan based off of nothing. So the way that you qualify for a DSCR loan is based on what the property will make on a 1-to-1 ratio with the mortgage. So for example, if your mortgage is $2,500 on this property, we just need to show that the property is going to make $2,500 a month, which of course it will, or you would not be buying it. So you can buy it right in an LLC. You can't buy a property in an LLC and a conventional loan, and we can do them for 15% down. So 15% down is a really low down payment for a loan like that. So you can have unlimited finance properties, 15% down, buy it right in your LLC, does not qualify you based on your own debt to income ratio. So it's pretty cool because the sky's the limit as long as you have the down payment. So I really